Okay, folks, so let's be real. The last couple of weeks, the stock market has been in easy money mode. Something that we haven't really seen since like January and early February. Many of the hardest hit sectors of the stock market, especially those that were shorted very heavily, have really gone up over the last couple of weeks. Of course, some were led by the meme rallies, but also just the overall lack of care about inflation. However, tomorrow a big catalyst is dropping that could dramatically change that. It could shift it in one way or the other. The other thing, of course, we need to do, I don't know if you guys have heard of this stock, but AMC, a little bit of a dramatic sell-off on the reporting of a share offering. It then bounced back when AMC said it completed it, and then it dramatically reversed again. Overall, though, it wasn't down too much compared to how much it was up over the last couple of weeks. But we need to talk about what the heck is going on and what's true and what isn't and what's going to happen. And of course, we're also going to be starting with some updates on main plays as well as some guidance. And the only thing that I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Legend has it that for each click, a single tear is shed by both Melvin Capital and Citadel. Quick violent update on plays. So Skills and Clove have been getting a lot of attention over the last couple of days. If you go back to my coverage of Skills and Clove after their massive sell-off in February and March, my take was that, hey, there's a massive amount of short sellers attacking these stocks. They've been oversold to oblivion, they've been short and distorted, but it's pushed it too far. And my take is that you're going to see frequent short squeezes because it's been oversold too much. So any piece of good news or any piece of buying pressure is going to rally these up massively. But that at the same time, don't be fooled. The trend isn't going to change. It's not going to be a strong uptrend until we get out of this overall FUD environment. And that has certainly been the case. And what does that really mean? Well, it means that this is a short-term trader's market. Long-term traders that are looking at the fundamentals aren't going to be rewarded right now. It's great to go ahead and find high conviction plays and buy them at cheap prices, but you got to be patient for those. The market is not rewarding fundamentals right now. It's rewarding cyclical reactions. That's why every few days you see all these opportunities that go up 20, 30, 40, or even 100%, and then act like nothing happened the next day and even sell off completely. Because the market is just being cyclical right now. People are cycling in and out of plays. There's a lot of random bouts of euphoria. Shorts getting crushed in one area, and you have catalysts getting emphasized in others. So as an opportunist, hey, there's a lot of opportunity here for short-term traders. I mean, you look at something like Clove, for example. This has gone to the sixes over and over again, and each time has gotten squeezed 30 to 40%. Then it sells off again. Hey, you may think that Clove is worth 20 bucks over the long run, but how many times is it going to bounce from 6 to 12 over and over again before it actually gets to 20? And that's sort of what I mean by opportunity. Sometimes you don't have to hold and just wait forever. Think about it. Workhorse doubled in the last 24 hours. How many more times are these stocks going to drop 50% and then double and then drop 50% again? Why not trade the moves themselves? You look at pretty much all of our long-term high conviction plays, and they're also providing a lot of short-term opportunities now. Jumia has practically doubled in the last 2 weeks, going from 17.7 to highs at nearly 34 today. And taking strategic entries when stocks are beat down allows you to both have the opportunity to long-term hold them, but also take some quick profits if they bounce. Do I like Jumia and I think it's worth a lot more in the next year and especially the next 5 years? Absolutely. But this doubling has nothing to do with the fundamentals. It has everything to do with the fact that people weren't scared about interest rates over the last couple of weeks. But in a minute, hey, something could come out and something may come out that it just tanks again. The other thing that I would be very careful to look for are trends. We picked up on the BlackBerry trend on Tuesday morning. It had some of the AMC effect going for it. We briefed on it Tuesday morning, we briefed on it Wednesday morning, and on this morning. And it basically doubled in that time span, but did I know that it was going to double? Absolutely not. I was just researching and finding different trends. It's up to us as traders to put the work in to identify trends and catalysts, and sometimes they run and sometimes they don't, but narrowing those opportunities down is the first part of the battle. Trends come and trends go, but you got to be aware of them when they're happening. I also wouldn't be too greedy with these short squeeze rallies. Another one that we briefed on this morning was another benefactor of the short squeeze hype. It went from the low threes to 475 and then cooled off. It wasn't anything like yesterday's AMC rally, but still, hey, this is a good trading opportunity. But at the end of the day, these are short-term trades. You can't diamond hand plays that aren't diamonds. You're going to end up losing the diamonds that you have. Speaking of diamond hands, it's time that we talk about AMC. AMC broke into new highs in the pre-market before the offering announcement dumped on the market and stopped the rally. Most media outlets reported that AMC filed to sell 11 million shares, which of course freaked people out because of dilution. And then when AMC reported that they had already completed it for the day, AMC bounced back. This morning, AMC filed saying that they were going to issue shares, and then they immediately issued those shares onto the market, taking advantage of the price while it was high. And honestly, good for them. They deserve the money to ensure the success of their business. It's a reasonable business move. On the other hand, it is a little bit of a slap in the face to retail traders because they filed for it this morning and then they dumped this morning. On the other hand, this wasn't this massive disaster that the media was reporting either. The share offering wasn't too bad. The 11.5 million shares isn't a disaster in a company that has over 450 million shares outstanding. And again, no one can really blame AMC for doing this. And again, before people say that I'm a shill for the hedge funds, by the way, thanks Citadel for the $50 you gave me for making this video. That was a joke. I am very, very aware that there are a lot of viral threads that were being spread around the retail community this morning saying that this offering was all a psychological trick and already happened in April, and the media was just bringing it up to get AMC down and psychologically trick people. A lot of the threads that were being spread were very, very misleading. And at the end of the day, if you go to AMC's actual SEC filing, you could see that what happened was they announced an offering, and then they took advantage of the offering over the next 3 hours or so. Again, this is what AMC's own SEC filing says. And at the end of the day, if you're spreading a lot of the misinformation, that same FUD and deception tactic that hedge funds use to get people to buy and sell things, you're no better than the hedge funds. So at the end of the day, if you're part of the APE movement and you want AMC to go up through deception, well, maybe you should check yourself. But to be fair, there was definitely some bad dealing this morning that made the whole situation worse. Early morning report showed that borrows went up dramatically, indicating that, hey, maybe short sellers were taking this opportunity to dump a ton of shares on the market at the same time that this offering news came out. Of course, after yesterday's massive rally and gamma squeeze, it probably isn't super crazy for them to think that this might have been a good idea to exploit some weakness now. They would be the first to have the information that an offering was coming, and they would see the sell-off coming ahead of time, so they could pile on while the getting's good. We were talking yesterday about how short sellers like to dump shares during downtrends because it makes them immediately green in their positions. It's almost like buying into buying pressure. It's like, hey, you buy it, you're almost immediately going to be in the green, and it statistically makes you more likely to win afterwards. And if you're a hedge fund that has tons of money, it can accelerate the downtrend as well at a time where there's so much other FUD. And I think that there's some strong evidence that happened this morning as well, especially considering how AMC popped up again towards the middle of the day. Going back to AMC's SEC filing, they also said that they're warning folks against investing in their stock unless they are prepared to incur the risk of losing all or a substantial part of their investment. Those are some bold words, but you have to be very, very transparent with your investors when it comes to being a public company. And if they didn't report this, hey, a bunch of ambulance-chasing lawyers would go and sue them after the fact, saying, oh, I bought AMC at $80 because the CEO suggested that this should be the next Tesla. How many times have ambulance-chasing lawyers sued public traded companies because they lost money on a stock? Just so many times, it's ridiculous. Interestingly enough, they do mention the possibility of a short squeeze as the catalyst. To paraphrase, they said after the short squeeze, investors may suffer substantial losses as prices decline once the level of short covering purchases has abated. Saying, hey, people are buying this to get a squeeze, and this could actually squeeze, but be aware that you could lose money after the squeeze. But the interesting part here is actually acknowledging that a short squeeze could happen. I haven't seen that one before. But still pretty damn funny day for AMC shareholders. But the fact of the matter is, it's still pretty strong. And the fact of the matter is that this being down only 17% since close yesterday on a day with such FUD after a 100% day yesterday and a 500% couple of weeks, well, that really says a lot about the strength of people who are holding the stock. And just this morning, AMC broke into a new high. So hey, maybe short sellers took back some ground today, but this is definitely not over. We were talking yesterday about, hey, maybe this needs to go down a little bit, cool off some steam, and then just stay flat for a while, make people be patient. But at the same time, of course, I got to be straightforward with you. If this was any other stock, I'd be saying constantly, take some profits. Even on my highest conviction plays, if they're up a quarter of the amount that AMC's up, I'm like, okay, hey, I'd be like, hey, you got rewarded a lot faster than we factored in. Great. Take the profits and then go on to the next position. But of course, with AMC, I've been very quiet, and you know the reason. Because AMC is more than a trade, it is a movement. And the risk versus reward here is entirely up to you. I've seen a lot of people that are like, okay, I want to stay in AMC, but I want to trade with the house's money. Maybe you'll pull the money out that you originally invested and then you'll keep the rest in. I don't know. I'm not suggesting selling. I'm not suggesting buying. You need to make up your own mind. Nobody that's genuine in the ape community wants anybody to buy something that they don't understand and they're not willing to hold, because it just creates a huge problem for everybody. One of the things you got to be really clear on is that eventually this is going to go down. It's going to go down dramatically. I don't think that anybody needs to be egged into buying AMC. I think that you have to do your research. You have to decide, hey, is this a risk that I'm willing to take? Is this a movement that I want to be a part of? How am I going to treat this? Or should I just be a spectator? It depends on you, right? Okay, folks, so now for the catalyst that's going to be happening in the next 24 hours. So the whole market is waiting on the sidelines for the jobs report to come out tomorrow. Last month, we had a huge disappointment on this report, and it temporarily cooled off inflation concerns and sent tech skyrocketing. But this time around is going to be much more important. On one side, too good of a report can accelerate inflation concerns. On the other side, too bad of a report can accelerate concerns that we're not having enough of a recovery. The jobs report will also place an emphasis on the government's role, how much stimulus they're going to pass, how much help they need to pass to get out there, policies that they're going to put into place to get the economy on the right footing. It's also going to dictate the Fed's policy. It could put a lot of pressure on the Fed to change their policy and maybe perhaps make them taper. If the jobs report is very strong, hey, the Fed may be like, okay, well, we have to taper. If the jobs report is very weak, the Fed may have to be forced to say, okay, well, we can't taper, but this is a problem. Two things you need to know about this jobs report. Number one, obviously the number of jobs created. Is it going to beat expectations? Is it going to meet expectations? Or is it going to drastically miss expectations like it did last month? Based on what we've seen so far, it looks like it's probably going to meet expectations this time. But also look at wages. Last month, a lot of potential workers didn't want to re-enter the labor force. So a lot of job creators couldn't find workers that they needed. This time around, perhaps wages have increased to incentivize people back into the workplace. But if wages have increased, hey, what does that say about inflation concerns? What does that say about price pressure on services and goods that we receive? When the cost of workers go up, everything goes up, right? And it's also true that the market is going to try extrapolating data from this report to say, okay, well, where are we going to be after summer? Where are we right now in the recovery? Is inflation getting out of control? How much more aid do we need? And that's going to dictate how much of a rotation we're going to have, because back in February, we were factoring in a massive inflationary boom, which caused a massive, dramatic rotation out of tech and some of the high multiple stocks. And it caused a lot of money to go into inflationary plays and economic recovery plays. And over the last couple of weeks, we've seen kind of a reversal of that. A lot of growth has been up, a lot of tech has been up, a lot of companies have been reporting really good earnings, so money's been flowing into them. But if we have too good of a report tomorrow, hey, that could reverse. My guess is that tech is in for a little bit more selling pressure. My guess is that the jobs report is going to be good. But we'll see, and we'll keep you posted. Anyways, that caps off this video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. Make sure to add me on Twitter at ZipCharlie. If you'd like to learn how to trade, I'll put a link to ZipTrader U below. Battlefield 75 will get you $75 off. You can go and look on the website to see a breakdown of what we offer in the course. The goal of ZipTrader U is, of course, to provide you with a step-by-step structure and also allow you to work with our private chat and be briefed every morning on what is happening and where the stock battlefields lie. We also have Webull. If you'd like to get some free stocks, I'll put a link to them below as well. Anyways, have a great day, and I'll see you in the next video.